whole area.
Let me drill down for them. My last question. What if Congress doesn't act on? I understand that the Commodities Future Trading Commission understand what you said about SEC. Is the Fed directly involved in any of these regulatory actions regarding cryptocurrency absent Congress action?
And so we have a say in what our banks, that the Federal Reserve regulated banks and bank holding companies do with crypto assets on their balance sheets, what activities are permitted and that kind of thing.
Does that
of course,
suggest,
the OCC is at that table, and so is the FDIC.
Does that suggest that a number of American banks are cautious because of your oversight of them on crypto?
I mean, American banks are are now very much exploring, are there profitable opportunities to serve our customers in this new space? And of course, what we're doing is saying, let's be sure that that takes place in a way that preserves and supports safety and soundness. And we've had a ongoing set of meetings and collaborations with the FDIC and the OCC. And that's ongoing, I guess, between us and the OCC. So I think that's an appropriate way to carry it forward. But it's not a substitute for what I think is it's not like it's like any other major area of innovation. Ultimately, Congress will come together to create a regulatory framework that is more fit for purpose for it, as it has in so many other cases.
Okay. Thank you, Mr. Chair Powell. Look forward to continue working together. For senators who wish to submit questions, those questions are due 1 week from today, Wednesday, June 29th. To Chair Powell, please submit your responses to these questions for the record for no more than 45 days from the day you receive them. Thank you again for your testimony. The committee is adjourned.
Thank you.
Costs for Georgia families, and what steps can Congress take to support the Fed and ensure a soft landing?
So I guess I'd be reluctant to give you advice while we're trying so hard to do the job that you've actually assigned us, which is to get inflation back down. But I think those are authorities that those of you who run for elected office have, and we don't have as mere appointees. So that's really up to you.
But you would agree that the folks at the margins of the economy are feeling the most pressure and pain, and that has to be addressed.
I think that's always the case, and in the case of inflation, it's really that if you're spending every dollar that you're intaking on the bare essentials of life, and the cost of them goes up 10%, you're in trouble right away.
Right.
Whereas middle class people and people better off than that, they've got some resources, some ability to deal with it. So that's why it's such a priority for us to get on top of inflation before it does become entrenched. Inflation's only now been around for it really didn't start until March of last year. So it's not at all too late for us to get this job done and get back onto the kind of path we all want to be on.
Thank you so much. I'm concerned about this, and it's why in the meantime I've introduced several bills to lower the cost for essential items like gas and groceries and medication. Thank you for your testimony.
Thank you, Senator.
On behalf of the chair, Senator Sinema, I think, will join virtually. Thank you, Mr. Chairman, and thank you, Chairman Powell, for joining us today. And congratulations on your recent reconfirmation. You know, the inflation numbers continue to be concerning, and this is the number one issue I've been hearing about from Arizonans. Families and small businesses are paying higher prices, and they need relief from soaring inflation so they can make ends meet. But we also know that this is not only a U.S. problem. Countries around the world, both big and small, are also seeing high inflation. So how is the U.S. positioned relative to other countries with respect to inflation?
I'd say our level of inflation is broadly comparable to that of other major economies. You saw Canada release their inflation number today. It's not far from where ours are. Same with the Western European democracies and the United Kingdom. But there are different compositions. So I would say generally, to generalize, in the United States, our inflation has more of a demand-driven component, whereas in Europe it is more, to a greater extent, driven by very high energy prices, for example. Although in the United Kingdom kind of has a mix of both of those. We also have high energy prices here. So the levels are similar, but the composition is a little bit different here in the United States.
Well, thank you. You know, crypto markets have experienced substantial volatility in the past several weeks. Has the Fed been tracking these events, and what implications do they have for how the Fed is viewing the broader economic outlook and making decisions with respect to monetary policy?
We are tracking those events very carefully, of course, and not really seeing significant macroeconomic implications so far. And but I think the principal implication is really what we've been saying and others have been saying for some time, which is that in this very innovative new space, really there's a need for a better regulatory framework that treats, the same activity should have the same regulation no matter where it appears. And that isn't the case right now, because a lot of the digital finance products are in some ways quite similar to products that had existed in the banking system or the capital markets, but they're not regulated the same way. So we need to do that, and I think that is the main takeaway I would have.
What is an appropriate proportion of current U.S. inflation to assign to Russia's illegal invasion of Ukraine, and how are you thinking about these events in the context of setting monetary policy?
Well, I would say that the increase in commodity prices are clearly connected to the war in Ukraine, and so that part of inflation would be certainly much lower than it is without the war in Ukraine. And there's nothing that our tools work on demand, and there's a job for our tools to do here. There is a job to moderating demand so that it can be in better balance with supply, but it wouldn't. We don't think that we have the answer to higher oil prices, due to the global oil situation.
I know the Fed tracks the core personal consumption expenditures index closely when thinking about monetary policy. Many trends in our economy, including a big shift towards technology and e-commerce, accelerated during the first year of the pandemic, and it's possible that the indicators and weights used to measure inflation may need to be revised to accurately measure inflation as Americans are experiencing it. So we all know inflation is high, but how high it is matters to ensure that we have an appropriate response. Congress and the Fed should make decisions based off the best information that most accurately reflects the challenges that families and businesses are facing. Have you given thought to this issue?
Well, yes, in the sense that we look very carefully at the way we measure inflation in this country. We actually use personal consumption expenditures, which is a little different and a better approach, we think, than the more traditional consumer price index. This was a change we made about 20 years ago, and I think economists generally think that PCE inflation does a better job of measuring the inflation that people are actually experiencing in their lives. So that is what we do, and we keep it updated. The government agency that manages it keeps it updated on a regular basis. So we think that's the right approach in terms of measuring inflation. Of course, we look at CPI as well, but we've chosen to make PCE inflation our principal measuring stick.
Okay, thank you. Mr. Chairman, I see my time's expired. I yield back. Thank you.
Senator Menendez of New Jersey is recognized.
Thank you, Mr. Chairman. Chairman Powell, I want to start on the issue of diversity at the Fed. I have a letter that we sent you yesterday and signed by 9 senators, including 5 members of this committee, urging you to undertake a number of simple reforms to the process for selecting bank presidents and Class B directors. That process has to include meaningful transparency and public engagement if we are ever going to have Fed leadership that truly represents the public as required by the Federal Reserve Act. So I'll wait for your written response, because we just sent that letter, on the details of those proposed reforms. But for now, can I have your commitment that you'll provide us with a substantive response by July the 22nd?
Yes.
Thank you. And also, will you commit to work with me to put in place real, meaningful changes to the process so we can have a broader array of voices to the Fed leadership?
I'll commit to having a frank discussion with you about that and what could be. We're open to ideas to how to improve. As you point out in your letter, it's not like we haven't made tremendous strides as it relates to the B and C directors in the course of the last 10 years. We really have. And the diversity numbers are, I think, quite impressive for the B and C directors. The A directors, as you point out in your letter, less so, but those are appointed by the bankers in the district. But we can have this conversation. I look forward to it.
Less so, but it's worse than less so. I mean, you don't have one bank president in the history of the Federal Reserve who's been Hispanic. That's far worse than less so.
I was talking about directors, but
yeah.
You're right about that.
And there was a tremendous opportunity, and it didn't happen. I just continue. I feel like I'm the lone effort on this, but 62 million Hispanic Americans who represent $2 trillion of domestic purchasing power deserve a seat at where some of the most important economic decisions are being made. So we look forward to the engagement that you've said that you're willing to engage in. Now, I am trying to find out, as others have raised with you, there's no question that painfully high inflation is affecting every family in America. But in order to develop the right response, we need to understand the underlying factors that are driving price increases. I think you've said here today that Russia's invasion of Ukraine, pandemic-related supply chain issues are perhaps, and the energy issues that flow from Russia's invasion of Ukraine are perhaps some of the biggest factors in driving inflation. But the question is, how is it that raising interest rates on those underlying causes of today's inflation ultimately are going to change it? Energy is still energy. Supply chain is still supply chain. Russia's invasion of Ukraine is a continuing challenge for the world. But there's nothing about interest rates that's going to affect any of that.
No, but notwithstanding that, there are major parts of the economy where demand exceeds supply meaningfully, where we can moderate demand and give supply time to recover so that supply and demand get back into better balance and inflation comes down.
Well, it seems to me that we can all recognize that raising interest rates is a blunt tool at the end of the day. But I'm going back to the beginning of my questioning, it's essential, I believe, to be mindful of the effects that your actions, meaning the Federal Reserve, will have on unemployment, particularly for those groups that were hit hardest by the pandemic. The Fed's latest monetary policy report states that, quote, employment for blacks and Hispanics not only declined by more than that for whites and Asians early in the pandemic, but also recovered more quickly since the end of last year. Now that we're potentially entering a period of larger and more frequent interest rate increases, What do you expect will happen to the unemployment rates of black and Hispanic workers relative to the population as a whole?
Well, it'll depend on what happens to the overall unemployment rate. And our goal is to achieve 2% inflation while still keeping the labor market strong. That's our intention with this.
Well, I appreciate what your intention is, but I would venture to say that what we will see is what we have seen in the past, that crisis after crisis disproportionately harms Americans of color. So I hope the Fed's response to inflation doesn't continue that trend, because it is woefully wrong that one group of Americans disproportionately faces consequences of policy decisions versus the rest of America. And this is another reason to have people at the Federal Reserve who represent this community to share those insights with the Fed as you determine these macro policies that are going to affect our communities disproportionately.
Thank you, Senator Menendez. Senator Tillis.
Thank you, Mr. Chair. Chair Powell, in response to a question from Senator Warner and a question from Senator Sinema, Senator Warner more or less asserted that we're all in the same boat in terms of inflation globally, but you made the point on two different occasions that what's driving inflation in largely Europe, a little bit less so in the UK, has to do with spiraling energy prices. Could you talk a little bit about, beyond the pain at the gas pump and the increased cost of transportation, how increasing, and I should say, and I believe that Europe is where they are, this is not for you to comment on, because they moved a little bit too aggressively and didn't look at resiliency with some of their energy inputs that were largely affected by the Russia invasion. But could you talk a little bit about the other commodities that are affected by rising interest rates? We're talking about housing, and we know that pipes, a number of inputs to housing construction, have gone up. Can you talk a little bit more about the market basket of other commodities that are influenced by increasing energy prices?
I think energy prices go into an awful lot of different places in the economy, including, as an input into manufactured goods of all kinds, and plastics particularly, and things like that. So it's a big contributor to inflation, not beyond just the actual energy prices.
Yeah, and so my only comment here, and then I just have a closing thought, is that we are unilaterally hamstringing your ability to bring inflation down. You don't have to respond to this. It's a policy position. By artificially increasing the cost of energy in this country. If we simply would recognize that there is a way to get to a transition to green renewable energy and make the glide path sustainable, we could easily separate ourselves from the rest of other Western democracies with respect to that tool, which is not in your toolbox. And hopefully we can get to that discussion and embrace the idea that the transition is inevitable. It's a matter of timing and resiliency in the meantime. Just one other question. I know the post-FOMC press conference, you ruled out a 100 basis point increase. Is that a long-term view or a view based on the circumstances as you see them today? In other words, would that be something potentially on the table if the measures that you're taking right now do not work out?
I think I would never take something off the table for any and all purposes. The committee that I chair will make whatever moves it believes are appropriate to restore price stability.
Okay. Well, I for one, am glad you're at the helm. I have a lot of confidence in you, which is why I voted for your confirmation. But we will be submitting some questions to the record back on the points that I made in the opening statement about transparency. There is some frustration, and I have to say it's bipartisan in terms of questions that we're asking and not getting answers to. The master account is one of them, but there are other items that we'll just include for the record. Thank you, Chair Powell. Thank you for serving.
Thank you, Senator Tillis. Thank you for your cooperation in this hearing today, and a busy day for a lot of people. And Senator, and Chair Powell, thank you. I have a series of questions. I have not asked my questions. I was saving them for last. But and then after my questions, we'll adjourn. You said that Russia's aggression to Ukraine, port congestion, and COVID lockdowns in China especially have contributed to higher prices. Consumer spending continues to be strong. Most Americans probably worry about inflation. Talk for a moment, if you would, about the strengths of the American economy now and whether or not you see positive signs of prices stabilizing.
Well, consumers are overall, not every consumer, but overall the consumer sector is in very strong shape financially. There's, as you know, a very substantial accumulated quantity of savings on balance sheets, less so at the very bottom of the income spectrum, but right across the rest of the spectrum. And so that's there to support spending even in the face of higher inflation. And you're seeing consumer spending hold up pretty well. Sorry, the rest of your question
Well,
was,
are there positive signs of prices stabilizing?
So in terms of prices stabilizing, what we're looking for is compelling evidence that inflation is coming down, and we don't have that. So nothing I could point to says that we have that. I will say that core PCE inflation is a pretty good indicator of where underlying inflation is running, and it has moderated over the course of this year reasonably significantly from where it was in the latter part of last year. Still way higher than it needs to be. We need to see a lot more progress. But just it's been running at a rate over the last, say, four or 5 months that is lower than it was, at least. But again, still far too high. So we're looking for that. We're not really seeing it yet. There are lots of stories out there how this should happen, and some people think it's very clear that it will. And until we actually do see it happen, we need to keep moving.
And I want to be clear from your comments publicly, your comments to this committee today. You say the economy is not at the point of a recession, correct?
I don't see the likelihood of a recession as particularly elevated right now. You should know that no one is very good at forecasting recessions very far out. No one's been able to do that regularly. But I would say that, the U.S. economy for now is strong, and spending is strong. Consumers are in good shape. Businesses are in good shape. Clearly, financial conditions have tightened, and you're seeing growth slow from the very elevated levels of last year associated with the reopening. You're seeing the beginnings of job growth slowing to more sustainable levels. And, there's risk in that. There's obviously risk in that. Monetary policy is famously a blunt tool, and there's risk that weaker outcomes are certainly possible, but they're not our intent.
And as I said at the beginning of my testimony, or my opening statement, that a couple hours ago, that our economy is growing faster than China's. Let me ask a few simple questions about gas prices. We've heard a lot today about gas prices from both sides. Just a few yes or no's. Does President Biden set gas prices?
No.
Does Congress set gas prices?
Not as far as I know.
Do you, as chair of the Federal Reserve, set gas prices?
No.
I wouldn't ask you to assign a sort of quantum responsibility, but starting with the decisions of OPEC and the world's major oil companies to not produce more, can you tell the committee briefly what goes into the price at the pump and ultimately what tools you have, Congress has, other government agencies have to bring the price down?
It's really principally the price of oil, which is set globally by the actions of largely by the actions of large oil-producing countries. And then it's the refining spread, what it costs to refine, what the refiners can charge before the public consumes that refined product. So those are the two pieces of it, and we don't have really, our tools certainly don't work to address either of those things.
Let me talk for a moment about housing. Several have asked about the skyrocketing costs for both renters and aspiring homeowners. Prices over the last 2 years, but prices weren't that great prior to President Biden and the last administration either, we know. Last year alone, rents went up more than 11%, grew faster than wages. What are the short-term and long-term effects on inflation in our economy if renters see more and more of their monthly income going to housing?
that will crowd out other kinds of spending, and that's the very fast increases in housing prices over the last couple of years have been very broad across the country and unsustainably high.
And that, of course, speaks to the importance of building more housing. Last question I want to ask before adjournment. We've seen cryptocurrency values collapse by some $2 trillion, and markets crash over the past few weeks. Consumers losing money, workers losing jobs. The Monetary Policy Report highlighted the risks of stable coins, digital assets that aim to maintain a stable value in order to trade cryptocurrencies. Talk for a moment, if you would, about the financial stability and monetary policy risks that these assets pose, and how are stablecoins different? In your answer, include how stablecoins are different from the U.S. dollar, which has the full faith and credit of the United States behind it.
A stable coin is an instrument really that is backed up in it. There's a reserve that has securities in it that are meant to assure the value of that, of let's say it's a dollar stable coin. So it's meant to assure that your interest is actually worth $1. So that sounds a lot like a money market fund, for example. And the way money market funds work is there's great transparency about what's in the reserve and their requirements about what must be in the reserve in order to preserve that $1 value. The world of stable coins is new and emerging, and it doesn't have the sort of fit-for-purpose regulatory scheme that it needs to. And I think that's something you've been hearing a lot across the board from a number of federal agencies and from our own Treasury Department, which has been leading an effort to try to put in place. And many members of Congress now have proposed new frameworks for regulating stablecoins and digital assets generally, and that seems like a wise thing.
And you don't, clearly SEC, clearly CFPB, other agencies, the Fed's role in regulation of cryptocurrency, in your mind, is what?
Well, that's one of the issues, is who really does have authority over this, and that's something Congress would need to clarify. We have authority over what banks can and can't do, some banks and bank holding companies. The SEC has jurisdiction over securities. The CFTC has relevant jurisdiction. So part of this will be sorting out, deciding what these things are and how they should be regulated. There are stable coins that are really used in connection with the crypto trading platforms. That's most of what happens now with stable coins, but there are also some stable coins and even more potentially that will be used in payments broadly. So that would be two different kinds of regulation there. It's just an area where Congress Congress is investing bandwidth and looking at proposals and something like, and that's, I think, a healthy process that should lead over time to something that has bipartisan support and puts in place appropriate regulation for the whole area.
Let me drill down for them. My last question. What if Congress doesn't act on? I understand that the Commodities Future Trading Commission understand what you said about SEC. Is the Fed directly involved in any of these regulatory actions regarding cryptocurrency, absent Congress action?
We regulate banks, regulate and supervise banks, and so we have a say in what our banks, the Federal Reserve regulated banks and bank holding companies do with crypto assets on their balance sheets, what activities are permitted and that kind of thing.
Does that
of course,
suggest,
the OCC is at that table, and so is the FDIC.
Does that suggest that a number of American banks are cautious because of your oversight of them on crypto?
I mean, American banks are are now very much exploring, are there profitable opportunities to serve our customers in this new space? And of course, what we're doing is saying, let's be sure that takes place in a way that preserves and supports safety and soundness. And we've had a ongoing set of meetings and collaborations with the FDIC and the OCC, and that's ongoing, I guess, between us and the OCC. So I think that's an appropriate way to carry it forward. But it's not a substitute for what I think is it's not like it's like any other major area of innovation.